Oh, hi, good morning, good afternoon, whenever you're watching this update. So again, we're coming at you with another variable rate update. So a few things to be aware of that happened this last week. So we did have some pretty meaningful moves in the fixed rate. And so, really all over the place, but a couple, I'd say 30, 40 basis points. When we say basis points, 30 would be 0.30 on the rate. So 1 point, when we're at 2.79, we're now at 309. So some different situations across the board. So fixed rates up. The variable rate discounts have been decreased a little bit. So when we're doing prime minus one, which prime right now, of course, is 2.7. So that'd be 1.7. So now we're doing that same mortgage for 2.0. So that is shrinking. So why does this have any cause for panic? The answer is no, in my opinion, of course. First off, we need to realize something that I just don't think comes out in the media. Rates always seem to bump up a little bit during the spring and the fall. They just always do. So we're in line with what always happens. We're not seeing rates that are really higher than what we normally see during that time. So that's nothing to be concerned about. And variable rate discounts when we have some volatility in the market. So for example, when we go back to the year 2000, we go out to 2020 when COVID first starts, we were offering variable rate mortgages prime minus one. Within 1.5 weeks after the overnight rate was changed, we were then offering them at prime minus zero. So it's typical for when we see some volatility for those prime discounts to be shrunk just a little bit. So that's not abnormal either. Of course, that doesn't affect any of your current mortgages. And of course, with a 2.2 over, in lots of cases, 2.0, 2.2 on a variable, and fixed rate being 3.5, even new clients were definitely encouraging you to go variable. News this week, of course, is that the Fed, which is the United States equivalent to our Bank of Canada, increased their rates. I want to talk a little bit about that, though. That's really important because they started saying, hey, we really need to aggressively move rates. How does the Fed and the Bank of Canada, how are they different from each other? So we need to be really, really aware of this, that there is the Fed in the United States, when they move interest rates, it has virtually no bearing on mortgage rates. Of course, it increases cost of funds and things like that. But a mortgage in the United States, very uncommon for someone to take a variable rate. Variable rates are often tied to a teaser rate. So it means that they have, it's the institution rate. So I'm going to give you a 1% interest rate, then 6 months, I'm going to up it to this or whatever. It's based on a rate that I set. Now, we have some similarities with a credit union variable rate here, but a variable rate that's not tied to the bigger picture. So I don't know if we're mortgage brokering in the States, would we recommend a variable? A fixed rate is fixed for 15 or 30 years. So 15 years, it's fixed, and 30 years, it's fixed, and there's no penalty to get out of it. So pretty big differences over what we're offering up here. So when the Fed increases rates there, it doesn't actually have an impact on mortgage rates. And also really worthy to note that our GDP and I think our government really banking on housing increases and that type of thing, really putting a lot of weight in that. I don't really agree that in the United States they put as much weighting on housing. You'll see some markets, especially towards the central United States, that really don't have huge appreciation over the years as at all. But if you go to Canada, you'll see that markets have. It's not just this year; they're typically always on fire. So you can see that government policy has allowed for escalating house prices in Canada and not the same respect in the United States. And so I think that's a pretty enormous difference. Although some people might disagree, I don't see the fact that the Fed increasing interest rates. I've always thought the United States was in a better position economically. The reason is that they were able to, most industries during COVID were able to not see a drop off in anything they were doing. In Canada, not so lucky. A lot of industries were affected, whether that be from shutdowns or limited capacity, such as restaurant or retail, or the fact they couldn't get supplies, where a lot of things being manufactured in the States. That's that's not completely the story in all cases, but I think that's a very realistic opinion. And so the Fed going up doesn't mean that we're going to see crazy interest rates here. I think that is really, really important to be aware of. I've actually done a video on interest rates historically over time with the variable, and you'll see that really, we have a situation where rates haven't been high for 25 years. So, in my opinion, we can't shock the system like that. If I were to tell you in the 1990s that we'd be offering a 3% fixed rate, you would jump at that in a heartbeat. And if we tell people we're offering a 3% fixed rate today, they'll think rates are too expensive. So just psychologically, huge difference. And people react. Now, the last thing I want to cover is obviously with, the question we get all the time is with inflation being so high, aren't you completely wrong that interest rates won't highlight out of control, as interest rates are used to curb inflation? Let me ask you a question. And I think about this all the time, is that if I have a car that's not working, and most of the time it is a problem with the engine, does that mean that the next time it stops working, I just completely always take a habit of pulling out the engine, no matter what, even though lots of the time the engine's been the problem? And even though I can maybe deduce that it's probably this time, I don't do that. I have to diagnose the problem properly and realize it could possibly be something else. And this is, I think, what's happening right now, is that people are saying inflation means rates need to go up. But inflation is a result, and well, not really a result, but the deal here is that is increasing rates going to have a difference on inflation? So if they increase interest rates, does that mean that housing will slow down? Well, no, we have supply issues. We have people, from what we can see in our business, buying more than one house. 40% of houses are free and clear. So interest rates makes no impact whatsoever on a house that's free and clear. So no, we don't see an impact on the housing market. Do we see any impact on the industries such as food or that are being affected by higher costs? Well, no, lots of those are to do with supply chain. So we're looking at a situation where people have to pay for more storage because they're not moving it as quickly. We're looking at the fact that people cannot move things over the border because of different things that are happening over there. They haven't manufactured enough goods in a lot of places. So with interest rates increasing would affect those people, yeah, in a negative way. They're already, what's being passed on is they already have higher costs. And so interest rates on a line of credit, like of a business line of credit, would mean those would go higher. So again, proving my point that I really don't see such great aggressive interest rates. So as always, I'm recommending do not lock in. And I want to say that doesn't mean that every day we're going to recommend that. Maybe at some point we're going to look at some options and things like that. Now, if you want to lock in, we have certainly help you and give you the option. You can lock in like 10 minutes. So it's pretty easy like that. I don't think you're going to go broke if you lock in either. Like, I think if you looked at all the data, I think you could come to that conclusion and that would be okay. But anyway, I hope you liked this video and this update for this week. If you're watching the channel, please do subscribe and share with whoever you can. If you want to talk about your variable rate mortgage, please do schedule an appointment with me below. I'd love to get a chance to go through some various options. People ask really great questions, and I super appreciate those, and I will usually address them on the video, the questions we're getting most often. Have a great day. We'll talk to you soon.